Okay, we can look at the databases in Stream using the DataFlex database builder, selecting a workspace, then opening a table, in this case the company master, and that gives us all the specifics of all of the fields or columns in the company master, what type they are, and this actually allows us to change them. One of the nice things about Stream is that field length can be expanded at the database level, and the application will pick that up. So if you have, for example, the territory field, which defaults to 3 characters, and you have 5-character territories, you can change this at the database level, and the application will pick up the database change and allow you to enter up to 5 characters in it. When you're in Database Builder, you can look at the relationships, you can look at the indices, and you can look at the parameters, for example, how it logs into the SQL server, different other behaviors. Now, one of the interesting things about SQL and DataFlex is when you have a field, let's say a date field, rev date, in the SQL world, you have the concept of a null, which means nothing. In DataFlex land, there is no concept of null because DataFlex is older than SQL. So a date field that's empty in DataFlex has a blank in it. Well, SQL doesn't allow that. So what happens is the runtime driver in DataFlex, when we programmatically save a blank or empty date, it puts in the date 1753-0101, which happens to be the earliest date that Microsoft SQL supports. This is done transparently, so you don't need to worry about that. However, if you access the DataFlex database or the Stream database using a third-party SQL tool like SQL Server Manager, when you see an empty date field, it won't be empty. It will have the date 1753-0101 in it. So one of the things that we do in our SQL queries is we automatically convert that to a blank. But that's something that, as a sysop, you need to know if you're using a third-party tool. For example, if you directly access a Stream database using Excel, which you can do, the blank dates are going to show up 1753-0101. So that's one of the idiosyncrasies of DataFlex and SQL. Another way you can look at the data is there is a program called DB Explorer. And DB Explorer lets you look at data files or tables directly without any programmatic interference. The first thing it does is the Database Explorer defaults you to about 20 columns. You can change these columns. You can scope and say, I only want to see records that meet certain criteria. For example, I only want to see records in California, in which case we can go up here to the DDO filters and we can say, we can add a filter. And here we say state equals California. So in theory now, we should only get Californias. Again, This is not an area of my expertise using this tool. I never use it, but it's a tool that's available on the system. But you have to remember, this is a raw data editor. If you edit in Database Explorer, you get no logging, you get no validation, you're completely on your own and have a real good chance of screwing something up. So on most systems, nobody will be doing it, but it's something that is available in DataFlex with Stream. In most cases, you're going to be working with the standard master file editors. And we'll go into the company master today, and we'll look at that in real detail. On our first session, we talked about the browse. If nobody has any questions that they've thought about in the last day or two about the browses, we'll just go directly into the detail panel. Our detail panel has our toolbar, has our record detail, which shows us what the current file field is, and it's off somewhere on another one of my panels. There it is. Shows us entered on, rev date, who, and time. And then going through this panel in detail. For every customer, you have an account number, you have an alternate account number. The alternate account number is not used by the system. It's just used as the ability to look up stuff with a different account number. You have a company name. One of the idiosyncrasies of Stream is that the company name is the primary key for a company. That's how invoices, orders, and other things are linked to a company. They're linked by the company name. They're not linked by the account number. Then you have type. This is a GenCode table like we talked about a couple of days ago that are site specific. You have a subtype, again, a GenCode table that you can set up. 2 phone numbers, a fax number, and then if you are running a compatible phone system or video system, you can directly make phone calls by clicking on the icons here, send SMS messages, or video conference. A customer has a status. There are 4 statuses that are supported in the system: active, inactive. On hold means any orders that come in get automatically hold, and X means out of business, they don't exist anymore. Then we have our tabs, the overview tabs, terms, which is how you do business with them. The first thing you have is a price level. The system supports up to 10 different price levels, retail and 1 through 9. Which price levels you use are maintained in a GenCode table. Additionally, the system will let you set up price lists, and you can say this customer is associated with this price list, and then the price levels become discounts off of the price list. The system has very, very extensive pricing capabilities, and that's a good hour to 2 hour discussion of all the different ways you can price stuff. Then you have the terms, what your sales terms are to the customer, net 5, net 30, prepaid. This field is grayed out from our security, so you can't get to it unless you have permission. Credit limit, same sort of thing, what the customer's credit limit is. It can be GenCode table driven if you want to only have specific credit limits and don't want to have someone set up a credit limit of $1,210. So it's either free form or controllable. Then you have a flag called check limit. And the check limit basically determines whether or not the system checks the credit limit when you're auditing. Why have a check limit? Just the way accountants like to work. For example, OFM has a customer, Amazon. The accountants set up an arbitrary credit limit for Amazon, but then they say, Well, don't stop taking orders if we hit that credit limit, because we know they're good for it. So we have the check credit limit box in order to say, well, this customer has a credit limit, but we're not going to stop shipping to them when they hit it. It allows you to then produce a daily report who's over their credit limit on who you need to look at. Then the next field down is the risk level. The risk level is used in order to do adjustments to the credit limit. For example, if you have a lot of customers set at a credit limit of $10,000 and you're getting to the end of the month and you've got some customers that orders are going on hold for because they're at their credit limit, and management says, well, we need to increase sales this month, so we're going to allow people to go over their credit limit. So you can, in the system, in the policy, say, allow customers with a specific credit limit risk level to go a certain percentage over their credit limit. So for example, you could say, allow all customers that are risk level 1 to go 20% over their credit limit. And then this way you don't have to go through and change all the credit limits for the last couple of days of the end of the month and then go change them all back. You can just change it as a policy. Does that make sense to everybody? I explained it clearly? Okay. Moving on, we have reps. You have a sales rep, you have an outside rep, an EDI rep, territory, inside rep, and buyer. These are really completely free form. The sales rep is associated with the sales order when it's entered. The other reps are just used for reporting purposes. The one that is not on there is the O rep or operator rep, and that rep is set in the sales order to whoever entered the order. Then moving on, we have the company name and address. Up here, we have the basic company name, which is normally 50 characters. But in some of our overseas clients, especially in England, you will have really long company names. For example, Joseph Smith and Brothers Locomotive Engineers and Steam Fitters is actually a real company name that one of our customers has in England. So you have an additional 2 company name fields that you can fill out, and these are then used when invoices or other documents are printed. We have 2 address fields, a city field, which is required, a state or a province field, zip code, country. You have options to map it. If you click on map it, it goes to Google and brings the browser up with a map. If you validate it, it goes to the US Postal System to validate the address. I'm not sure if I have it. Okay, here I've got it hooked up. So if you click validate, it goes out and does this. It says this is the address that we've entered. This is what the postal system would like it to look at. The postal system prefers all uppercase, but they don't require it. It then also tells you if it's a residential address and that the address got validated. If it fails validation, you can click here and show the validation details. And this is actually what you got back from the post office. Now, in this case, it just comes back and says, this is what you sent, and this is what you got back. If it doesn't like the address, it will give you all of the information about that address it can. For example, if you use an address that's in a strip mall or in a building that has suites, and you only give it the street address, it will come back and say, this building has 10 suites in it. Here are the different suite numbers. Which one are you actually talking about? So it's fairly useful. Now, on the other hand, it will come back and tell you that it's an invalid address. which is why we have a button on there for you to use Google Maps to find it. And if you have a new development or a new address, the Postal Service will sometimes not be able to validate it, in which case you have an override button that you can click if you're allowed to, which will override the address validation and say, okay, accept this address even though the Postal Service doesn't say it's legit. An example of that would be a Northern Canada address that is serviced by FedEx using small aircraft. You might have an address, Kawangchuk Village, second house past the restaurant. And the FedEx delivery guy can actually deliver to that, while the post office won't accept that as a valid address. Same thing with international addresses. Depending upon what services you have with Cove, the default is US and Canada address validation. You can also license international address validation, and that gets really complex, and some of these addresses are really difficult to parse. While we're talking about override, we have the override button. Let's digress a little into security. You can set up, if you have rights, security on any button or any field in the system, so you can disable people from overriding addresses. Again, that's a complex or advanced security feature that'll be covered in a different training session. Here we have the weather group. The weather group lets you go out using the either the Weather Channel or the U.S. National Weather Service, in which case the Weather Service here is offline at the moment. If you have this set to auto, it'll automatically show you the weather at that place. The Weather Service goes on and offline. It's not highly reliable, but some people like to use it. Underneath this is a short list of the contacts. Over on this tab, you have a more detailed contact list, but we show some of the contacts on the front to save you having to go into the contacts tab. Over on the left side, we've got activity, shows you their current AR, their high balance, last payment amount with dates, their current open orders, month to date, sales year to date, trend sales. The trend sales is updated based upon a nightly process that you can say, I want to show the last 3 months, last 6 months, running 12-month sales. Their last order date, quote, and sale date. And you can run an aging query here that will show you their current aging. So that's the overview tab. On the accounting tab, we have what the finance charge you charge that customer is, how many NSF checks, how many bounce checks they've done, what their billing cycle is, and what their AR auto post is, which is what account in accounts receivable sales to this customer get charged to. Normally, they'll get charged to the trade or general sales or trade sales to third parties. However, if you have a parent company or a subsidiary company, you actually want to charge them to a different account, because those sales you're not going to get cash money for, so you don't really want to show them in your accounts receivable. You're going to get reconciled using some sort of intercompany reconciliation. So when you set up a parent or a sibling or a child company, you'll use a different AR account than your regular trade account. Then you've got a vendor customer number. The vendor customer number is what customer number you have, what vendor number you have from that customer. So for example, Bay Area Systems considers our sample customer here as vendor number 48253. This is necessary with some EDI transactions, or some customers require on an invoice that you provide your vendor number with them to make their life easier. Then on the credit side, we have how long their longest late is. We can say hold orders over a specific amount. And this is frequently used if you have fumble finger salespeople, where instead of putting in an order for 10 chairs, they put an order in for 1,000 chairs. And you don't want that to process through the system without somebody taking a look at it. So you can say, for this customer, they normally buy orders of $500 or $1,000. Any order over $5,000, I want to take a look at because it's a little bit unusual. Then you have the skips holds field. This is sort of like the check credit field. It allows you to identify certain holds that should be not used for this customer. For example, if you have a sibling company that you sell to, or a parent company that you sell to, and you sell to them at cost or at very small margins, you don't want the orders to go on hold for margin hold. So you would put an M in here saying, don't do margin hold with this company. You could put a C in to say, don't do credit holds with this company, so that you don't have, or a price hold, so that you don't block orders for companies that you don't want holds checked or specific holds checked. Then you have a credit rating field, which is just a field to store a credit rating in. And then you have average days to pay, which is updated as part of a nightly process. I'm going through this stuff pretty fast, so please speak up and stop me if you need more detail about any of these. Then we have the bill to address. The bill to address is different from the customer's address. The bill to address is where the invoice should be sent. For example, Pacific Bell has 300 or 400 different operating locations that can be treated like customers because they place orders independently and you sell to them independently. Or someone like Office Depot. Office Depot has many Office Depot stores, and you may set them up individually because your salespeople visit them and market them and you want to track sales, but all of the invoices go to a central facility. So the bill to address basically means, where do I send the invoice to? Then we've got tax information. Taxes for people that sell retail, which even though we have primarily distribution wholesale customers, a certain number of them do sell retail. We allow you to store a tax ID number. We allow you to store a tax type. The tax ID number is usually their federal ID number. We let you store their tax type, which we looked at yesterday, is either exempt, export, government, resale, or retail. We store a tax code. The tax code is the specific taxing authority that determines how much sales tax you need to charge them if they are retail, and the date that we loaded the tax code. You can refresh it, and that will go out and pick up the latest tax code for that specific customer. Then the customer may have a separate tax number, and we let you store sales tax certificates. If you ship to multiple states, like most of our customers do, and you don't want to collect sales tax in that state for that customer, you have to have a sales tax certificate from each state. And we allow you to store that in the system for the state, when it expires, what the tax certificate number is, and an actual image of the tax certificate number, which this is a test system, so I've got stuff floating all over, because the tax authorities require in most states that you not only have their tax number, but you actually have a copy of their tax certificate, and they will accept images. So every year in December, you need to run one of our queries and send out a mailing to all of your customers that don't have to pay tax to get their retail exemption certificate, and then you need to scan it, attach it to the customer record. Now this is a little bit cross setup, because if it's a retail customer, they don't need a tax certificate. If it's a resale customer, then they have to have a tax certificate. In order entry, if the customer is flagged as resale and you don't have a tax certificate, it's going to go on an N hold. N meaning no tax certificate, or a tax certificate that has expired. When you enter the customer's zip code here and hit return on it, the system will go out and look in either the zip code file or run a web service to get the correct tax code for that customer if you have Nexus. Does everybody on the call understand what Nexus is? If not, speak up and I'll explain it. Please do. Okay, Nexus means you have a presence requiring sales tax to be collected. This was established in 1972 by the Supreme Court with the Quill versus the state of South Dakota, I believe. The Supreme Court decided that you have an obligation to collect sales tax for a state that you're shipping goods to if you have a physical presence in that state. And a physical presence is defined as having a warehouse there, having a store there, or having a salesperson there. Now, from 1972 to 2018, that was the rule, that if you had Nexus in a state, you had to collect sales tax. In last year, the state of South Dakota readdressed that issue. It went up to the Supreme Court, and the Supreme Court now changed the rule. The rule now is if you do significant business in a state, the state can require you to collect sales tax. The state of North Dakota says if you ship more than $200,000 into our state, you must collect sales tax. Other states like New York have ignored the Quill ruling and have said if you ship anything into New York, regardless of whether you have a presence here, you have to collect sales tax. Now, the state of New York only goes after you if it's enough sales tax to make it worth their while. And if you fight it, let's say you're a Florida company, you have no presence anywhere outside of Florida, but you ship to New York. New York will sue you in New York. They'll get a judgment against you. They'll try to localize the judgment in Florida. You have to fight it in federal court. Federal court will throw it out because of the Quill Act, but it's cost you a lot of money to fight it. So what happens is if you are large enough that you're going to show up on people's radar, you end up having to collect sales tax in the 46 states that collect sales tax. And that's meant by having Nexus. The system has a text data record, which we talked about, that lists all of the states that you have Nexus in. So what happens, looping back to the customer master and also in the ship to master, when you enter a zip code and your tax type is retail, the system will go out and check, does your company have Nexus in that state? If it does, it will go out and look for the appropriate tax code. It will look for the tax code one of two ways. If you subscribe to the web service, it will go out and get the tax code from the web service. If you don't subscribe to the web service, it will get the tax code from the zip code file in the system, which needs to be maintained by you at the company level. So it's a choice of paying for the web service or maintaining the tax codes in the zip code file, and we'll get to that zip code file in a little bit. If you don't have Nexus in many places, it's a cheap way to go. If you have Nexus all over, then the web service is a better solution. The other advantage of the web service is that it checks the sales tax requirement by geocode. A geocode is the geographical latitude and longitude of where a facility is. The zip code file only checks based on the zip code. So it really depends how accurate you want to be. In some places like Long Beach, California, you have Long Beach Boulevard. Long Beach Boulevard in the center of Long Beach is all one zip code. However, the tax rate on one side of Long Beach Boulevard is different than the tax rate on the other side of Long Beach Boulevard because of the school district tax. So if you only use a zip code, you'll get the same tax rate for both sides of the street. If you really want to be accurate, and some larger companies require that, you have to get the correct zip code based on the physical street address, and that requires using the web service. So that's the short version of sales tax. Then we'll move over to the right here. You can have a currency. The currency determines what currency you use for doing transactions with that company. A commission percent, a discount percent that the company gets, that ties over to pricing. If you have the company set up, for example, for retail pricing, and you put a 10 in the discount field, order entry is going to take 10% off of the retail price and use that as the target price. Then you have the minimum order value, which is similar to hold over. You can set a minimum order value for the company. You can say, we only accept orders from this company of at least $100. And that can be for various reasons. It could be a complex ship to address. It could be what country they're in. Any number of reasons. It's another one of the things that's audited.
Frank, I have a question.
Sure.
Going back to that discount field, is that automatic? Are you saying if you put 10% in there and the order entry enters an order, it's going to take 10% off?
Yes, it is.
I did not know that.
And if you right click here and you want to set, or actually not right click, let me find the right key here.
So is that going to be 10% off the total order? Is that going to be not by line item?
No, that is by line item.
Oh, it is?
It adjusts the price by line item.
Oh, see, we are not using that field.
Well, what you probably have is your customers set up by price level.
Yes.
If you have a customer that's price level 1,
yeah,
that might be 10% off. So
right.
the
Okay.
pricing stuff is, I guess the honest answer is it's horribly complex because there's so many different ways that people can do pricing.
Right.
That's a good discussion for a whole separate training class on how to do pricing.
Right. Okay, thank you. I didn't realize that field was there.
Now that's a field that's normally blocked at most sites, so people don't inadvertently put those
Right.
numbers in. Okay, moving on to operations. Operations, we have the ship via. How are you going to ship stuff to this customer? Then we get to the field via terms, which tends to be a tremendous discussion topic because via terms are actually your shipping terms. And specifically, they are actually called Incoterms, International Commerce Terms. Within the US, the most commonly ones used are FOB and FOB destination. Now, FOB destination is actually a bastardized VO terms because it's not internationally recognized. And FOB shipping point is also a bastardized one because it really just means FOB, but US customers will use FOB destination or FOB shipping point because that's a common usage. And for most goods being shipped, when you're shipping stuff with parcel carriers or less than truckload and it's a box, the handling is really not important. But if you imagine, we have a customer in Oklahoma City called Boardman, and they ship really, really big stuff. And when I say really, really big stuff, some of the things that they ship weigh 100 tons. And when you start getting into really big things like that, FOB shipping point is not really clear because FOB shipping point normally means freight on board. You bring the truck, we'll put it on the truck. Well, when it's UPS or FedEx or LTL, the truck rolls up to the loading dock, you throw the box on, or the driver uses a pallet jack and puts it on. It's not a problem. If you have a 100-ton tank, you have to have a crane come to lift it up on the truck, and that can cost a couple of $1,000s. So it becomes much more important to determine what your freight terms are. And with those type of things, you use the standard Incoterms, which are, for example, XDoc. XDoc means that I will pay to bring it to the dock next to your ship. It's your problem to get it on the ship. Or I will pay to move it onto my loading dock. It's your responsibility to load it onto the truck. So when you get involved with very large shipments, heavy pieces of equipment, it becomes very important. If you're shipping 20 railroad cars full of wheat, the wheat is less expensive than the handling, so the via terms get much more complicated. With parcel shipping, the via terms are very important because they determine at what point title passes, which means how far are you responsible for the shipment. If it's FOB shipping point, that means I'm responsible till the UPS driver lays his hands on the package and loads it in his truck. If he drops it, not my problem. If it's FOB destination, that means it's my problem until the UPS driver puts it on the ground at my customer's site. So who carries the risk is determined by FOB destination or FOB shipping point. Any questions on that? No? And for international stuff, it gets much more complicated because if you have a shipment going, for example, from the US to Delhi, India, and it's, well, let's take a better example. You have a shipment going from South Africa to Frankfurt, Germany, and it's a container full of copper. One of our customers is a copper broker. You have to be able to specify in the via terms exactly who's responsible for the freight, the insurance, the risk, the cargo, the inland traffic, because the container is going to be picked up at the mine, taken to the harbor, loaded onto a ship, carried from Durban to Hamburg, unloaded from the ship, put on a train, taken to Frankfurt, taken off the train, put on a truck, and then delivered to the smelter. You have to be very specific who pays for what at what stage, and that's what the Terms does. On our website, under application notes, if you're interested, there's an international Incoterms document that describes all of this. Okay, we get down to ship billing code. We support 3 different default ship billing codes. When an order is entered, it defaults based on the customer to either one of these 3. You can either charge the actual shipping each time, basically what ShipRush or the parcel system calculates. You can say, calculate either the fixed shipping, which means the shipping amount I entered, or the actual amount on the first shipment only. And that's done for people who have a policy that say, if you order 5 things from us and we ship 4 of them, we're going to charge you $50 for the shipment, and the 5th thing that we're back ordered, we're going to ship on our expense. And then the last one is fixed on each shipment, where you say we have a flat rate of $50 shipping for each shipment, and this is commonly used if someone will put in an order that has 5 lines that are going to be shipped on different dates. Then we have shipping documentation. You can specify by customer what goes in with the shipment. Packing list only, which is the default, invoice only, or both an invoice and packing list. Then we have the vendor ship flag. The vendor ship flag is a 3-way flag. This basically means vendor shipping means that the goods are going to be shipped from my vendor's facility directly to my customer. That is different from drop shipping. Drop shipping means I'm going to ship the goods from one of my warehouses to my customer's customer. So let's take Amazon, for example. Amazon buys widgets from me. I can either ship those widgets to Amazon, which is a normal warehouse shipment, or I can drop ship for Amazon, and Amazon says, send the widgets to Fred, who ordered them on our website. So that's a drop shipment. In the case of a vendor shipment, Amazon orders the widgets from me, but I don't stock them. I have my widget manufacturer ship those widgets directly to either Amazon or to the final consumer, and that's a drop shipment. Doesn't go through my warehouse at all. Now, based on the customer, I can set that this customer does not accept vendor shipments. They want the stuff to come from me, or this customer only accepts vendor shipments, or if I leave it blank, then I can ship it any way I want. In the vast bulk of cases, vast majority, you're going to leave it blank. The same flag is also in the catalog and in inventory, and it's used more often there, where you'll have an item that you don't carry in stock that you only vendor ship, or you'll have an item that you always stock and you never vendor ship, or you have an item that you stock, but if somebody orders a whole bunch of them, you'll vendor ship them for that one order. So the 3-way flag is both in the customer and in the catalog item and can be set any number of ways. Then you have a flag that determines whether or not the customer requires a purchase order. to go with every sales order. Then you have a handling code, which says, charge your handling charge, no box charges. Charge one box charge, no handling charge. Charge a charge for each box, no handling, no box or handling, or box charges and handling charges. So some companies charge $2 a box charge plus $5 handling charge, and you can set up all sorts of different arrangements there. And then what the handling charge is, it's GenCode table driven. Then here, these buttons here are associated with the billing codes. I'm sorry, the rate charge. If you want to charge a flat rate for air shipments to this customer, you can key it in with this button. If you want to set a flat rate for deliveries if you're using a house vehicle, for example, you may be a local grocery wholesaler and you charge $20 for every delivery, regardless of how much it is. You may have a flat rate for LTL shipments, or you may have a flat rate for parcel shipments. So this allows you to, for some of the more unusual rating, we don't put a field here, we just give you a button to access it. Then you have the fulfillment return address code. Let's go back to our Amazon example. If you're drop shipping for Amazon, Amazon wants you to have a specific return address on the box, and that might be their return address. Or they might want you to have their customer name, Amazon, with a special return address. They may want you to have a customer name, but your shipping facility return address. So if it gets refused, it goes back to you. Or they might want you to have a generic return address that says fulfillment facility and your return address. So if it gets refused, it goes back to you, but the end customer doesn't know who you are because you fulfilled it for somebody else. And then the last thing in this area is the free freight over. You can set a value in here saying that this customer gets free freight if the shipments are over X number of dollars. Then we can store here the customer's website, what region or sub-region they're in. If you use regions or area, these three fields let you identify either marketing or territorial regions to more detail. Then we've got some control flags for this customer. For example, ticket billing. Ticket billing means that accept orders from the customer, accumulate them, and then bill them on a periodic basis. Customer may only get billed once a week or once a month. Summary billing means generate an invoice for every shipment, but at the end of a period, send the customer a summary of all of their open invoices with the invoices attached. Sales BOM means that when you have a kit item, for example, OFM sells kits, that on the invoice, the kit should be exploded. Otherwise, it's just one line. System invoice is the same sort of thing, that if you're selling a system that consists of multiple individual components, you can either list them or not list them. Back order means, does this customer accept back orders or not? If the back order flag is checked on this, for this customer, it defaults into the order. And when the shipment is made, any lines that you can't ship are closed because the customer does not accept back orders. Partial's okay. If this is checked, that means if you don't have everything, you can ship the things you have and the other things get shipped later. whether or not to send statements to the customer, whether or not to send dunning letters. The customer's language, who the AR operator is for that customer in accounting, who the dunning operator is. Some review and audit dates, the last date it was reviewed, and then some comments. Same with audit dates or audit date 2. And then this section here allows you to specify documents that are required for each of your customers. And this tells you if you have the documents on file. If it's red, they're missing. If it's yellow, that means that the document that you have on file is too old. For example, a Dun & Bradstreet report. You can have it on file, an image of it, and if it's older than a certain amount of days, then the system will tell you that it's time to refresh it. So that pretty much gets to the end of our hour. So we covered the customer and the first 3 tabs.